Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March the 1st, 2018. It's the first of the month, so there's bound to be some new balancing going on. Obviously, we've had some action in the Globex last night. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning, we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We create two main hypotheses, which is our normal, hypo 1 and hypo 2. These are our plans based on whether or not we see the buyers taking control or the sellers taking control. And then we have two alternative hypotheses, which is our expansion. Now, lately, we've been seeing a blend of those hypotheses like yesterday. Yesterday, our hypo 1 and hypo 3 got blended together because of the expansion in the average true range. Right now, the 20-period daily average true range is running at 65.93. Have not seen this, I think, since 2008 when our average true range got that wide. So we are seeing blending of those things. If you're interested in checking out the room, we do everything live here in the go-to and the pre-market, and then we do live trading and analysis during the course of the regular trading hours. And you can send me a contact request at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis on the regular trading hours. There is, if you want to go to my YouTube channel, there's probably probably over, I think it's going to be close to 800 days of these pre-market sessions, so you can get an idea of what we do each day, and it doesn't change, the same routine every day. But before we get going, you have to read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So yesterday, let's do a look at what our hypothesis was yesterday. Our main hypothesis was an open auction in range, a push up into the 60 to 65 area, possibly even taking out that 70, but then finding responsive sellers, rotating us down into the naked VPOC, pushing through, and then coming down and testing somewhere between the 42 and the 37.50, which was our key line in the sand. We're looking for responsive buyers to step in and rotate us back up and chop around in the 42 to 47 area and go sideways. Hypo 3 kicked in if we broke below the key line in the sand at 37.50. We said if we broke below that level, that we'd likely go down and test the 27.28, which was the micro composite VPOC balance that we broke out of about 12 days ago, and possibly even push down to close the gap down here and test this support at 27.18. We didn't quite get to the 27.11.75. I posted on Twitter yesterday afternoon that if we broke that 37.15, we'd be looking at the 28. If that 28 didn't hold, 18, and then possibly the gap close. Just missed the gap by one tick, but we closed just near key support. So hypo 1 stayed in effect most of the day, and then once we broke down again, hypo 3 kicked in and we broke down. And you can check yesterday's video for the accuracy of that statement. I know I don't draw them up like FT does, but we're not all like FT. Okay, so let's take a look at the news first. We did just have continuing jobless claims, and initial jobless claims came out better than expected. That's why we've had this push up and currently moving up again into yesterday's profile. In 6 minutes, we have the Dallas Fed. 36 minutes, we've got RBC, manufacturing PMI out of Canada. And then 51 minutes, we've got Bloomberg confidence and manufacturing PMI at 9:45 Eastern time. And then 10 o'clock is going to be construction spending, but the big one is we're going to have Fed Powell, the new chair of the FOMC, testifying again. And that's going to go on, for probably about an hour or more. So the market's going to get volatile during his testimony. It did get volatile when he was testifying or speaking earlier last week. And then we also have ISM manufacturing and ISM manufacturing PMI. Then continuation, we've got natural gas at 10:30, and then we got Dudley speaking from the Fed. Then we've got the beige book. We've got car sales later on in the day, total vehicle sales. So there is a lot of news today, and we're seeing some weakness coming into this marketplace. So I think things are going to be quite volatile today. So just be careful. It is the beginning of the month. You're going to get a lot of repositioning from the fund. So I am expecting some OTF, other time frame, participation today, and we're likely to see some wide, average ranges. Speaking of which, if we go to yesterday and we look at the average ranges from yesterday, let me just open this up. You can see that again, our typical, average rotation usually is around 3 to 5 to 6. We were at 850 yesterday combined, 7 up, 9.5 down. I expect it to be even larger today. I always like to start my day looking at a simple candlestick chart. It's a routine that I do. Some think it's rudimentary. Well, rudimentary sometimes is good. And I use a 9 EMA and a 20 SMA. I don't use them to trade. I use them for simple purpose of where are we in terms of the time frame trend. And I start with a monthly and I work my way down, just giving me an overall view of where we are in the larger time frames, and then working my way down to see where those trends could be challenged or even changed. On the monthly, we've got good slope, good separation. The 14 months of one time framing up ended in February. We had one of our first down months in over a year, and we challenged the trend by breaking below the 9, but we popped back up, and of course we just opened. Our month open is 2746.50. Actually, let me just verify that 1 second. I forgot to do that. I use the full session. I just want to make sure here on my other chart here you can't see. Our month open is 2746.50, so that's right. 2746.50 is our month open. So the trend is still intact. We're going to be watching this 2624.50, but that's way below us right now in terms of the trend on the monthly. On the weekly, you can see that we did break below the 9 and the 20, and then we popped back up. The last couple of weeks we've been holding, and we're right there below the 9 right now. The 20 SMA is at 2680, 2681.50 is going to be a key level for us. But the trend is still, although we're losing slope and separation and it is being challenged, it hasn't been violated yet on the weekly. But once we go to the daily, you can see that we are coming down and testing the 9 right now, and we break below the 2700, and we're going to get a possibility of the continuation of the downward trend. We had good slope and separation to the downside, then they took it back, and now we're fighting to hold. And if we break below that, then we could see the possibility of a start of a downward trend on the daily. Once we go down to the 4 hour, You can see we are starting a downward trend, good slope and separation below the 9 and the 20. We want to watch that 27.23 for a possibility of trying to hold and continue on the upper larger time frame trending. But right now we're seeing a downward move. Going down to the 30-minute, you're going to see that we are trying to battle, and we had this downward slope and separation, and now we're fighting it, and we're trying to hold. Even though we've seen some weakness coming in, I've been seeing a lot of absorption on the buy side. So I don't want to get, even though I'm going to be biased to the downside today, I don't want to get overly short and get my face peeled. So just keep in mind that the longer time frame trends are still up. As we look at the structure of the market, the larger time frame, and I'm going back to where this whole thing, the gap up started, and the breakout of this, this balance down here. The microcomposite VPOC is still down in the 2500s at the 2581.75, but then we came up and we had that big move up, and then we had those breakdown days. Then we created a microcomposite with the VPOC down at the 2643 level, and then we broke out of that balance, came up, and we've created balance here. We tried to break out of it. We could not hold. The sellers stepped in heavily at the 2758 and a quarter, and now we're back inside of this value area that runs from the 2705 up into the 2749 with the VPOC at the 27 40 or 27.2475 is where it's at right now. And then we've got this key line in the sand that we were using yesterday at the 27.18. It's going to become our over underline today. So if we get above it, we're looking for push back into balance at 25. If we stay below it, we're looking for a move down into the 13 and a push down into testing the value area low again at the 27.05 and possibly test the centennial number and maybe go down and break the overnight low, which is down at the 26.98. So if we take a look at and before we do that, just let me put one thing in. The key level below the 2700 is the 98, but if we do not hold the prior the Globex low, the next big destination is down here in this balance area right here at the 2685. I'm going to be using 2686.75, and don't forget the lower side of that distribution is 79 and 79.50, I should say, and just below that is our year open. Our year open is 2675.75. That is the true open for the year, meaning that it's the Globex open, not the RTH session, which a lot of people do. I still believe that the year starts the first trade of the year, which is right at that Globex open. So if we look at the overnight session, you can see that we're about, I'd say, 60% net short. But we had that big breakdown. By the way, same action as we saw in Globex the night before, where we had these big moves down. Then the buyers stepped in, they fought it, and then they took it up, okay, right back into the prior day range. Then they broke down again. Beautiful FUBAR Mr. Sneaky tech gap setup right here at the low of the night, and and then we just rotated right back up, and we're coming up near the highs of the night, which is at 27.21 and a quarter. So a very wide range in the Globex, very volatile. You can see, we talk about this all the time. When you see OTF participation in the Globex, you're looking for the volatility to continue and get greater in the up and coming RTH session. So we'll be looking for continuation of OTF participation today. Kind of a double distribution overnight with a fairly decent excess tail. That 12 to 14 area. I'm going to be using the 14 area, the 1350 to 14 area, as a key reference point. And obviously 18 is going to be my over underline, which we're coming up to, because if we can get above that, then I think we take out the overnight high and go up into that microcomposite VPOC balance at the 25. So moving our levels over, our overnight high is 22 at 2250. It could extend because we do have time. Our overnight low is not likely to change. It's down at 98. I already got it in there. We're back in this lower distribution. The 18 level, I'm actually going to use the 1750. Actually, 1775. And again, you have to give a little bit of a slush there, but that is going to be my over underline. What do I mean by that? Above it, my bias switches to long, and I'll be buying dips. Below it, my bias switches to short. And other than that, I've got most of my levels. We've got a couple singles that we left yesterday, TPO singles at at 27 and a quarter and 27.37. Our value area high is going to be a target and a trade area. My trade areas are where I want to scale out and I want to get in or add on. My targets are where I'm going to be scaling in any trade. So in terms of the levels above, you've got the 31, you've got the 33, then we've got that single at 37, and then the VWAP at 39. And then above that, we left value above. The target will be up here in 47, and then the IB high targeting. I'm just putting the levels in. These are my levels to guide me. You don't necessarily have to pay attention to them yourself. And, if we get up there. Now, our average true range, our 20 period full session average true range is running at 65.93. So from the low overnight of 26.98, our upside daily ATR is way the heck up there, still above yesterday's range high at 27.63.75. And the daily downside ATR is all the way down here at 26.56.50. So that's just to put it in perspective that based on the volatility that we've seen and the range that we've seen, it's not without the realm of possibility that we can come down and get below the year open, or take this all back again and get back up into the 2760 area. Do I think that's going to happen? I don't know, but I'm going to be prepared for it, and I know where I'm going to be watching for those possibilities. So let's go to our hypos right away. Our hypo 1, because we've got weakness, because we're seeing the volatility, I'm looking for a wide open swing. I'm looking for an open auction in range. I'm looking for responsive buyers to move us up towards this 25 area. And then somewhere between the 25 and the 31, I'm looking for responsive sellers to step in, rotate us down through the lower distribution, break below the over underline, come down, fight the low of the prior day and fail, and come down here into this 95 area. And then I'm looking to base here and basically go sideways between the 95 and the range low at 27.12. So that is hypo 1. Should probably do this. I always do it small, so you might not see it. And I don't draw it. I can't get a drawing tool to work properly on GoTo. My hypo 2 is the opposite of that. And it's going to be an open auction in range fighting this, this lower distribution, then breaking below the 2712, coming down into the 95, getting a probe lower down into these singles and into this prior microcomposite VPOC at 81 and a quarter, and then I'm looking for buyers to step in and rotate us back up and again come up and balance down in here between the 95 and the 2711. So I mean, basically hypo 1 and hypo 2 are kind of mirror images of each other that result in the same thing, a balancing but a breaking into the 2600s and fighting the centennial number at the 2700. My hypo 3 is a breakdown day, a continuation down, open auction or an open rejection reverse, and failure to get above the 25 microcomposite VPOC, and then breaking down quickly, finding sellers taking control, coming down into the 95, chopping near the overnight low, and then failing and pushing down through to test the year open, probe down into the 60s, between the 70s and the 60s, and then find buying and come up and close somewhere in this prior balance in around the 81 and a quarter. And that's my expansion to the low side scenario. In terms of hypo 4, open rejection reverse, failure to take out the overnight low, test the 2700, but find buyers, rotate us back up into the 18, fight the 18, up into the 25, find continuation from there, break through this low volume area and push back up into the 47 and come up into the upper distribution and chop around in here and ultimately close somewhere between 47 and 57. So those are my 4 hypotheses. I don't know what's going to happen. I'm using the levels to guide me to see who's in control, waiting for that impulse wave to give me indication of who's taking early control, and then I'm going to execute the plan that best suits that. Going to gold. Gold, again, we talked about how important that, whoops, that's not my gold chart. We talked about how important that 28.20 was the last week and a half we've been talking about this level, and we said if we broke below that, we're likely to come down into the 20, and if that didn't hold, come down and test the 14. We said 14 was a very important level to hold. If not, we'd likely come down into the 1300 and test that. So far in the Globex, we got to 1305.50. 1300 is very important to hold. If not, remember that the most traded price, or the composite VPOC that goes all the way back to October of 2008, 10 years ago, is still below us at the 1284.90. And if we don't hold the 1300s, that is a really big magnet and a big destination. And I'm waiting to take advantage of that. Once we break below 1300, I'm selling rallies very aggressively into this 1284.90 because it's likely going to have to go down there to pick up buyers. You can see how much action we saw down in that area the last time we got below 1300. So, the levels to pay attention to today really is going to be 14 and 13, 14, and 1300. We're likely to come down here and see some chop in here, and it's going to be hard to trade. So really got to wait for, do we reject the 14 or get above it? Above it, we're looking for back to that 20 to 22 area. If we reject it, we're looking for rotation back down towards 13. If we come down to the 13 and reject that, again, looking for a bounce off of it and chop. But if we break through it, then we're looking for a push down into the 1294, and ultimately, I don't think we'll get there down to the 1284.90. It's possible, but it'd be a very big move. So I'm really thinking that if we don't hold the 1300s, the key target is going to be that 1294. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.